QuickBooks Pro Plus Desktop 2022 OneNote presentation. Bills, enter, sort, and pay. Let's get into it with Intuit's QuickBooks Pro Plus Desktop 2022. If you have access to OneNote, would like to follow along, icon left-hand side, topic introduction 8365, bills, enter, sort, and pay tab. Take a look at the immersive reader tool topic introductions in the text area too, with the same name, same number, but with transcripts. Transcripts that can be translated into multiple languages, either listened to or read in them. Same name and number as presentations as well. Topic introductions designed to give an introduction to the topic, provide screenshots, links where applicable, give accounting background to complement the presentations, and can be used to follow along with them if you don't have access to the software at that time. Closing the icon on the left-hand side, starting off with the screenshot of the home page. We're now going to be entering the bills, and then we're going to sort the bills and then pay the bills. And the prior month, when we paid like the month-end bills, like the telephone bill, utility bill, and so on, we did so by basically writing a check. This time we're going to be entering that information into the bills and increasing the accounts payable. The other side then going to the expense account if it's an expense account that is going to be impacted. And then we'll pay the bill, which is going to make a form of check, but a kind of a different formatted check within the system that will label it as a bill payment type of check, decreasing the checking account, decrease in the accounts payable. So here's our Verizon bill. So we're looking at Verizon. The bill looks much like the check form when we did it last month, but this time it's a bill form, which is going to be increasing the accounts payable. That's what a bill does. We got the expenses tab, the items tab on down below. It's not automatically populating down here, even though we paid Verizon in the past because we did so last time with a check and not a bill. If I scroll down to the vendor center, we go into Verizon. Here's what we paid last time with that check. Again, we did it with a check form and not a bill form. Therefore, we'll have to select the item for the expense. Again, it won't memorize the transaction. Next time, if we enter another bill, it might memorize the transaction for us, making the data input a little bit easier. This is going to be then increasing the accounts payable. The other side then going to the bill of the telephone bill. So instead of decreasing the checking account as a check would, we're increasing the liability of accounts payable, and we put it down here into the telephone bill on the income statement. Last month we had a check. This time we had the bill. Both of those forms would be the same on the income side of things, recording the expense. On the balance sheet side, they would be different. The checking account decreasing, the check decreasing the checking account, the bill increasing the liability. Spectrum, we're going to make another one for Spectrum. We're going to assume this is going to be our internet. It's going to be increasing the accounts payable. We're going to look for an account and see if we have an account given to us by Intuit when we set up the company. They've got computer and internet, which we're going to use, but we might say, hey, I'd like to just whittle that down possibly just to like internet expense. So I'm going to go into the register or into the chart of accounts, lists, chart of accounts, lists drop down, chart of accounts, and edit that account and just edit it to get the account that I would like instead of adding another account, which would be just internet expense, because that would be confusing because I'd have two accounts. So I'm going to use the accounts, if applicable, given to me by the system, by QuickBooks when I set up the system. If I don't like the name, I'll adjust the name. If there's no account at all that applies to what I'm doing, then I'll add a new account at that point in time. So here's the adjusted account, internet expense account, which is still a little bit confusing because you get it mixed up with interest expense oftentimes, or at least I do. Maybe, maybe that's just me, but in any case, that's what we're going to have here. Here's the bill has been entered. Accounts payable is going to be increased again. The subledger is going to be increased as well for that vendor. And then we have the internet expense increase down here on the income statement side of things. If we look at the subledger breaking out by vendor, supporting the accounts payable account, now we've got the people that we paid, the Verizon that we paid have a bill outstanding, and then Spectrum, we have the bill outstanding here. If we go into the Spectrum and the vendor center, then we see our bill here as well. That's another way to see the detail. If we go into our transactions tab in the vendor center, we can sort by all bills or the open bills, and that's another way that we can kind of sort our bills to determine which ones we want to pay and do our cash management strategies. Here's our Edison. That's going to be our utility bill or electric bill, which we're going to put into the utilities expense. So this is going to increase accounts payable. The other side going to the utilities expense. Accounts payable once again going up. And there's the accounts payable with all the bills. Accounts payable goes up with bills. and it goes down when we hit the pay bill items. And the other side is going into the utilities. We're grouping that together. Typically, we got gas and electric grouping utilities these days. Last time, we had a check that we paid for the electric bill. This time, we got the bill. Both of them hitting the expense account. There's being a difference. On the other side, on the balance sheet side, the check decrease in the checking account, the bill increase in the liability account of accounts payable. Now we're going to go into the pay bill item, which gives you this nice little sort field, allowing you to determine which ones you would like to pay. We're going to pay the Verizon and the Spectrum, checking them off, issuing the date down below. You could choose whether you're going to write with a check form and whether you're going to assign the check number or let the check number be done by the system. You can then print the checks if you so choose, which means you would have to have the checks already set up outside purchasing the checks that you put into the printer in the proper format so that you could print the checks, or you can assign the check numbers if you're using some other kind of format like an electronic transfer or some other check format like a checkbook. You can assign the checks. Now, this will then make multiple transactions, which will basically be check type forms, but special check type forms, which will be the checks for the payment of the accounts payable, and they will be decreased in the checking account, and the other side is going to go to the accounts payable. If I go into the checking account or the check register, then you can see these are just like the other checks in that they're going to decrease the checking account. Here it's a payment, but the check has this little check form, and this is a bill payment. That's how they mark it off here. So it's still just a check form, but at the bottom of it, you're not going to have that same, items and expenses, but rather it's going to be linked to the bill because you're paying off the accounts payable. That's going to make the accounts payable go down, and then the checking account to go down. Here's the accounts payable activity. We got bill, making it go up, and then the bill payment check, which makes it go down. That's going to be the scenario. That's what you expect to see in accounts payable. If I go into that check, it doesn't take me back into that check, into the bill payments area that we saw last time, but rather into an individual check, the top half looking just like any other check, but the bottom half not having the expense tab and the item tab, but rather this thing down below, which is showing us that it's linked to a bill. And then if I go into the checking account, we got the bill payment. Once again, it's marked a little bit differently than the other checks, even though it acts like a check, decreasing the checking account, and that allows you to sort by those items that are paying the bill. So that's actually quite nice. We got the vendor balance detail, which now we see the bills have been paid for Verizon and Spectrum. This is what we expect to see. It goes up with a bill, goes down with a pay bill, bill payment check. And there we have it back on down to zero. If I go to the vendor center, we can see the detail in here as well. And we can possibly hit the drop down and sort this by the open vendors. These would give us the vendors that still have balances within them. We can go into the transactions and we might sort the bills, for example, by the open bills. And you can see we have a smaller list of open bills given the fact that we paid off a couple. Let's take a look at the transactions with a journal entry. It's straightforward journal entries. When we enter the bill, this would be the journal entry behind it. We debit the telephone expense. The other side is going to go to the accounts payable. So if we look down here, we got the payable is going up. Same for the month of February and the year to date. The other side going to the telephone expense. On the current month, there was nothing in it for the current month. It went up by the 360 to 360. For the year to date, it was at 410, up by 360 to 770. The total net income for the month was at $6,196. It goes down by the 360 because it was an expense, decreasing net income to $5,836. So the decrease in net income happened even though we didn't pay cash yet because it's an accrual type of transaction, accounts payable going up, and then the expense $13,624 for the year to date, down by 360 to 13,264. Here's the detail with regards to the general ledger, and notice that the subledger is breaking this information out by who we owe. We had an increase to Verizon of the 360. If we add up all the people that we owe, that adds up to 3720, which ties out to what is on the trial balance and the general ledger. And then the next one, we paid the internet. So same thing, we're going to say debit internet expense, credit the accounts payable. Here's the detail, accounts payable goes up. Internet expense is going to be down here. We didn't have that last month, so we have the 180 increasing for both the current month and the year to date, but the net income is different. It started at, before both of these transactions, 6196. Now we've got a 540 decrease to 5,656. We had the 13,624 for the year to date, decreased by the 540 to the 1384. Interest expense, interest, this is the wrong, should be internet. See, as I told you, the internet and interest, I'm going to delete that. The accounts payable here was at the 3,720, up by 180 to the 3,009. And then we have down here, Spectrum is who we actually paid for the vendor, increasing that by 180. If I add up all those, it should add up to that 3,900, which is on the general ledger and the trial balance. Utilities, same thing. We paid Edison utility, debit the utilities expense, credit the accounts payable. So the accounts payable going up now once again. Utilities was down here. It was at 0 for the current month, went up by 648 to 648 for the year to date. It was at 620 plus 648. That goes up to 1,268. The current month net income was, before these transactions, 6,196, up by the 1,188. I'm sorry, down by the 1,188 to 5,008. And then the year to date was at 13,624, down by 1,188 to 12,436. Utilities for the year to date, here it is again, 620 up by the 648, and the GL to 1,264. Accounts payable was at the 3,900 after the last transaction, up by the 648 to 4,548. Then if we go to the subledger down here, the utility was Edison. Here's Edison increasing the vendor that we owe. If we add up all of these items, it adds up to the 4,548 in the subledger, tying out to what's on the GL and the trial balance. Then we're going to pay off some of these items. So now we're going to pay one check off. This time I'm going to do one check by check. So this one is paying off that 360 for the telephone. And when we do the pay bill feature, we do these at one time, but it creates multiple transactions. So this would be paying off just the telephone. This would be the pay bill form, in essence, journal entry for paying off the telephone, which would be a credit to the checking account and a debit to the accounts payable. So checking account going down, the accounts payable would be going down. No income from that transaction on the income statement because we already recorded it when we entered the bill. So now we've got the accounts payable was at the 4,548. It's going down, this time with a debit, 360 to 4,188. Checking account was at 106,262, and it goes down by the 360 to the 105,902. So now we paid off the Verizon. It goes back down to 0. If we add up all the vendors that we owe now, it adds up to the 4,188, tying out to the general ledger and the trial balance for accounts payable. Then we've got the next check, which we're paying off this time for the internet, which is Spectrum. So we're going to be debiting the 180 for the accounts payable, crediting the checking account. So the checking account then going down, accounts payable going down. We could see that more clearly in the general ledger. Accounts payable was at 4,188 after the last transaction, goes down with a debit 180 to 4,008, and the checking account was at 105,902, goes down by 180 to the 105,722. And then if we look at the subledger, we have then down here the Spectrum was the vendor that we paid for our internet, was at 180, down by 180.20. If we add up all the vendor information, then we're at the 4,008, which ties out to what's on the GL as well as the trial balance.